Today, we'll do a roundup of how the big whale investors and institutional analysts now think of Tesla after the Q3 earnings call. Piper Sandler, TD Cowen, Baird, and RBC Capital all reiterated their buy and outperform ratings with price targets ranging from $500 to $548. Dan Ives from Wedbush maintains his price target of $600. Mizuho raised their price target from $450 to $485. Meanwhile, bears like Wells Fargo reiterated their target at $120, and Canaccord cut from $490 to $482. One firm, Cantor Fitzgerald, made a big move, raising their price target 43% from $355 to now $510. We'll also take a look at all the questions asked by analysts at the earnings call and see if they now see Tesla differently than before. Emmanuel Rosner, Wolfe Research, asked about how unsupervised autonomy will affect vehicle production. Dan Levy from Barclays asked a great question about potential new businesses Tesla will get into next. Walter Piecyk from Lightshed asked about details of robotaxi. And Colin Rush from Oppenheimer asked about Optimus. These were all good forward-looking questions. Larry Goldberg is a serial entrepreneur. He's with us today with 50 years of entrepreneurship and has been an active venture capital investor for the last decade. Welcome, Larry.
Hola.
Well, appreciated Goldberg taking over and being a great host a couple weeks back, and appreciate you, Larry. That was a lot of work on your side, and the audience loved you, so thank you.
I'm an amateur.
You're great. So thank you very much. Now today you're back as an expert, one of the guests, and one of the topics we love to cover is how the institutional analysts are thinking about Tesla. I looked at the questions. We'll go through each one of them, and I think that it was good. It was good questions. So first of all, it doesn't seem like much has changed in terms of how the earnings call affected their price targets. But here's the list here: Piper Sandler, overweight, price target of 500. TD Cowen reiterates a buy. Wedbush, they're still at 600. Baird, they're still at 548. And RBC Capital. Then you got Wells Fargo. They still at 120, right? Despite anything, they still stick their guns to staying low. UBS reiterates their sell at 247. And then you've got Canaccord. They're the only one that really cut their price from 482 to 490. Or sorry, they raised. They cut their price from 490 to 482.
Well, that's I mean, come on. How do you do
Mizuho raised their price from 450 to 485. So those are tiny little changes. But here's the big one. Cantor Fitzgerald was the only one that after the earnings call, they raised their price target by 43% to 510 from 355. So they seem to be catching up, and they took this opportunity. They now see Tesla over the medium to long term on meaningful future upside, energy storage and deployment, FSD, robotaxis, cybercabs, semis, and Optimus bots. Seems like these guys are talking about robotaxi and Optimus now. Thoughts on these changes by institutional analysts?
Yeah, so I feel pretty vindicated. You know, I said that the stock price is going to be reflective of Elon's attitude and how positive he is. And I felt that he said all the things that I wanted to hear. He gave us a sense. He didn't say it in one speech. He didn't say it in the introduction. But over the course of the call, I got the sense of what the future held through 27 and into the new company, into this new Tesla. It would have been nice for him to have said, we're on the road towards the new Tesla, and these are the milestones we're going to achieve over time. And he said it in bits and pieces, in components of the conversation. What is really good is that continued the process of bringing the analysts up to the understanding, bringing them to the understanding of what Tesla really is, where it's going, what the transition that's taking place. And now you have a situation where not just the leading edge of the analysts, led by the inimitable Dan Ives, but what these leading analysts have been able to see, you see it seeping into the analyst community one at a time. And so, the latest example is, which was the one that Cantor Fitzgerald, for example, now they've in the fold. So you you have these guys coming into the fold one by one, understanding it. And that's why you saw initially, because of the earnings miss, so-called miss, you saw the stock fall overnight. You saw at the opening it down significantly, day after, like the next day, the first opening. And then the stock continually crept up. Why? Because you had institutional buyers beginning to understand where the analysts are. So this has been my long-term argument. And it seems that we're at the very edge, the very cusp of realization by the market of what is really happening. So here you have Cantor Fitzgerald saying, we see the bot is coming. Yeah, we understand FSD. Yeah, we understand robotaxi. Yeah, we understand cybercab. And now we understand the bot. And so you have this creeping realization entering into the analyst community, first at the cutting edge, we should call it the Ives edge, and now we
Nice.
see it, the knives edge, or I'm excited. I'm excited because I can see going into 2027 through 2026, we have this real kind of energy building. And then I have to say one thing, the discipline this company is showing in terms of managing its costs and managing its cash through these very difficult transition periods is an absolute masterclass for any startup that is having to transition from one strategy to its next strategy. It is a masterclass. And, I have to say, Elon Musk is highly prized for his innovative thinking and his innovation in his whole way of running a business. But nobody understands that he is the master at managing expense. And if you want a great founder, if you want the greatest founder, you have to look for the founder that not only has brilliant ideas and not only has the means of implementing those brilliant ideas, but can do it with intense discipline as to cost. He's got it all. I mean, this is a founder that has it all. That's why he's such a great founder, and that's why we see him founding these companies one after the other, each one a magnificent success.
So we are going to do another show that will publish tomorrow. This will be published on Sunday. This one will be published on Monday morning. That's the one that we're actually going to dive deep on Tesla's cash flow, financials, income statement, how they compare to other auto business and others, and you'll help us figure that one out a little bit more in detail. So one of the things so it's great. You were saying that earlier, right? That the way that Tesla, the analysts are now understanding what Tesla's like, bits and pieces. But Tesla could have done a better job, Elon specifically, in communicating this. If it wasn't for these questions from these analysts at the last bit Q&A section and the retail investors, if we weren't for those Q&A, a lot of the big information, why didn't they lead with that? Nick Gibbs was explaining that he was very, very upset about that, the intro of Elon's intro didn't reveal any info. Vaibhav's intro was all about, the financial deck that was just released, no new info. But then they released the fact that, yes, we are going to remove a safety driver. This is how we think about, how the robotaxi rollout is going to look at. This is how we're going to roll it out to new markets. This is what we're going to do with Optimus. Here's our businesses. All that was, we had to pull that info. It was like teeth pulled out by asking questions. But so he could have done a better job with that, right? I mean, just the way he positions a company, he does. I think that he did not write this out. He's not reading a script. He's just kind of bullet pointed out. And he didn't prepare for this.
He's not even bulleted out. It's from him. It's from him.
Okay. Well, anyway, so that's the problem, right? He didn't communicate this well. But yeah.
Look, I understand. I listen, I participate in some of these calls and I listen to some of these calls. There's some of these conversations. And I understand the frustration of the retail investors because Elon does not have a huge amount of interest in pumping that stock price. He just doesn't. He has the philosophy, as he has in, by the way, in marketing his products, is that the results speak for themselves. A beautiful product will always sell. A result that's really good will always sell. And they should listen to my words and not, I shouldn't have to make a great presentation. And I understand the frustration. I do understand the frustration. I would love to have had, the ability to coach Elon as to how to approach that call. None of his executives feel empowered enough to actually do that for him. And certainly Vaibhav doesn't have the communication skills. So I understand the frustration, but I'm just pointing to the results. And the results are the day after the call, the stock is up.
Mm-hmm.
So, obviously the message is seeping in. People are doing the analysis, they're reading it, and the message is seeping in. So, yeah, you're right, Nick, you're 100% right. I don't doubt that you're correct. He could have done a much better job. If that's the biggest problem of Elon running my companies, I'm going to live with that.
It's a good point. I mean, you know that I'm a big Apple fan prior to Tesla, big Steve Jobs fan, still am. But, Steve, the way he does his presentations were masterclass, just perfect. Everything.
Steve had what Elon doesn't have. And by the way, Elon has what Steve didn't have. What a partnership that could have been. Hey, wow.
You just made me think about that.
I'm still anxious for Elon to take control of Apple because Elon could do such great justice to this magnificent product and product lines and concepts that Steve gave life to. And he could turn that into such a magnificent business. Oh, everybody says, it's already worth $3 trillion. How do you take blah, 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 blah. Boy, you ain't seen nothing as to what Elon. Anyway, I'll get off my high horse.
I love it. I love it. You're thinking big. I mean, eventually Tesla and Elon and Apple will be $50 trillion, not just. Okay, so that's incredible, right? So Tesla is communicating needs to do. So this thing about how Tesla's story, you and I and the Tesla investor community has been saying this for so long. First, we said Tesla's an energy company, not an auto company. That took, you were one of the leaders in the retail community doing research on that and explaining it. And then we did a bunch of shows explaining that. And then eventually we started hearing analysts say, yes, Tesla's an energy company, but only when we see it on the books, 10%. Then a community started saying, hey, it's a robotaxi business. Only when robotaxi launches, now they're saying it. Now, why is it, though, that I guess this is the alpha, isn't it? That some investors see Tesla for what it is, and then they get proven right, and others just doesn't. Here's Dan Ives trying to explain, and on CNBC, I think this is a TV channel. Tesla's an AI company. It's just silly that this is still the questions being asked.
How do you think Tesla is going to perform here on? And what do you feel about their roadmap when it comes to FSD, when it comes to autonomous vehicles, and generally increasing sales in geographies such as Europe and China, where things have been under stress?
Yeah, I mean, look, I think that if you look at demand stabilization, I think that's really the key word, especially in China. I mean, China's seeing an uptick. That's the first time really in the last year. But look, the reality is the story going forward, this is about AI. I mean, the AI roadmap now at Tesla, autonomous and robotics continue to be key. We've talked about autonomous is worth $1 trillion. We'll go into the story. That's the focus for investors, when you actually look at the story going forward as a physical AI play. And that's why Musk, wartime CEO, leading it.
Yeah, so questions are still all about demand. But even on vehicle demand, China and APAC were up 33% sequentially from quarter to quarter. North America was up 28%. and Europe, EMEA, was up 25%. So
I mean, that's a
despite
kind
that,
of bogus number, Herbert. I know that it sounds good, but
sure.
the last quarter was so bad. So, I mean, yeah, they were up very significantly. They had a lot of inventory from last quarter, and they drove that inventory down, so that helped, their situation. But they face a very tough quarter this quarter. Numbers are going to be disappointing. Although Europe's looking good and China's looking good, but the US is not going to be great. In fact, it's going to be very poor. So, I mean, I'm so sick and tired of the auto numbers. They mean nothing. I don't think $200 of the current share price, and maybe it's $160. That's where the price got down to. That's the value of the auto company. At best, it's $160 a share. Maybe it's less. Maybe it's less than 100. That's not what we buy Tesla for. And so this whole, we're like living in two universes. The whole Tesla community is like living in two universes. On the one hand, we keep touting the cars. On the other hand, we say, "Oh no, we're now a, AI company." Well, I've got news for you. We're not a car company anymore. We're an AI company. We're doing these cars because we've got these gigantic factories that we have to keep busy in the interim. That's the reality of the situation. And by the way, that's a good thing. It's not a bad thing.
Yeah, when they're going to switch those production to autonomous cars, we're starting to hear Lars and Elon say
Right.
that we're pretty well done with drivable cars.
Yeah,
He called
exactly.
it what did he call it? He called it horseless carriages. We're at that horseless carriage stage.
Yeah, listen,
know.
I've got my 14.1.3 download awaiting me. I couldn't do it this morning because my wife's driving out, and so I downloaded it. I haven't applied it yet. But from what I'm seeing on 14.1.3, we're ot. It's a Hebrew word for saying now. It's just about here. And so I don't know why we are obsessing about these bloody deliveries, obsessing with it. And here we have proof, living proof. The stock price the day after the disappointing news is up over 1%, over 1.5%, actually closer to 1.75%. On the day after we announced these disappointing delivery results. Is that not telling you something?
Yeah,
We
that's
are
good news.
divorced from deliveries
Finally.
as far as the future of the company is concerned, and we should recognize that.
So that's the analyst, which is actually the part of the show today, is showing that, hey, the analysts have at least understood this. But, media, they're still so far behind. Public,
Well,
they're
it's
still so far
seeping
behind.
into the analysts. I wouldn't say all the analysts. I would say that the leading edge of the analysts, starting with Dan Ives and working back down. And then there's all those analysts that have understood the story all the way along. In fact, some of them were somewhat ahead of us in terms of understanding the story. When I say us, I mean the retail analysts. So there's no doubt at all that it's beginning to seep into the analyst community, and therefore it will seep into the the professional investors and the institutions.
So let's take a look at the questions that was asked. Here's one, Emmanuel Rosner. Where is he from? He's from Wolf Research. So he talked about this. Elon mentioned that he's now ready to expand production of vehicles as fast as possible now. Now that we have confidence, Elon said, in unsupervised autonomy. He didn't want to scale quickly if he wasn't going to get to unsupervised autonomy. And then he said, how should we think about that in the context of your existing capacity of 3 million units? Because Elon said that that's the case. Is that where you're hoping to get volume to? What sort of timeline are we talking about? And Elon did come back and answer that question, saying that 3 million will take about 24 months of existing factories, but that we're willing to build more because now we have unsupervised. So I thought that was a good question. I'm sacrificing margin. What was your thought on this question?
The productive capacity of the plants are going to undergo a revolution, starting with the cybercab. So the 3 million productivity is going to blow out everybody's focused on this 3 million number. I saw a lot of posts about it this morning. It's a number that is going to morph. Once the cybercab production gets started in volume in mid of next year, they're going to understand what the new production methodologies can deliver. If what they think is true, then by the end of next year, early the following year, if not the middle of the following year, they're going to have converted design and vehicle type or vehicle model into the new paradigm. Because in the existing space of the Shanghai factory and the existing space of Austin, and more importantly, the existing space of California, of Fremont and Berlin, they'll be able to manufacture many, many, many more cars than they're currently able to manufacture. So the unboxed method and approach hasn't met its early promise, but it promises to blow out its real promise, its ultimate promise. And if that happens, then the conversion rate from the 3 million to the 12 million a year or whatever million a year can happen. If you can manufacture a car every 6 seconds, as opposed to every 3 minutes, I mean, the same factory is going to quintuple, it's going to increase its production by tenfold. So if you're going to increase production by tenfold, you go from 2 million to 20 million. So I don't think it's an issue. But what is an issue is that we're going to have to change the design and structure of all the vehicles. And so that is a big, big project.
Can you explain that some more? What do you mean?
Yeah, because it has to change from a vehicle that's designed to be manufactured by a long production line
to unbox.
to one
Gotcha.
that's
Yep.
broken into these component parts, at least three parts, possibly 4 parts.
Okay. No, that's great. I mean, what I got from that was when he said that now that we have a path to unsupervised autonomy, I'm going to now increase production like crazy. I'm going to scale now. Every car we make, he's pretty confident will be sold. Everybody will buy that car because it can drive itself, right? So that he'll create as many drivable cars as well as cybercabs as much as possible. Yeah. So this 3 million number, people are stuck to going, oh, so your factories only are able to get 3 million for 2 years. They're stuck with that number. But I think that
but that's because they're
we're going to hear it. Yeah,
they're still in this whole mode of vehicle. That company is a car manufacturer. I mean, it's not an auto company. And if people think about it as an auto company, they think about deliveries first. And when they think about deliveries first, they're thinking about a legacy delivery mechanism, and the company is about to convert to a non-legacy. So all the assumptions are wrong in that question. And that's why Elon is so short with these things, because they don't make sense as a question.
That was great. It's a mic drop. Thank you for that answer, Larry. Fantastic. Here is Dan Levy. Dan Levy had 2 questions. He's asking about new markets, willingness of Tesla to engage and go into new markets, new TAMs. What are the growth prospects? How do you find which are Tesla's core competencies versus where do you draw the line for markets for AI that are outside of Tesla's core competency? Elon's answer I thought was fantastic. He said, well, actually, we don't have any. When we started, there was no core competency. We created core competency as we went along. I've created personally and responsible for 12 startups within the company. And then that he said that the human or robot is an unlimited money glitch. I mean, if you think about it, right? If you can create embodied AI, that embodied AI can create any business you can think of. If you want a clothing business, all of a sudden, Tesla's in the clothing business. So I thought that was a good question, good answer. What's your thought about this? At least it's recognizing that Tesla is an innovative company that can create new businesses. That has been my biggest issue with analysts and other investors for so long. they look at Tesla and they think that 10 years from now, they're still going to do energy, auto, AI. And I'm like, if you follow the company, every 2 years, Tesla's gone into a brand new business you hadn't even thought of yet.
Yeah.
And there's no doubt 10 years from now, there'll be 3 new businesses and not
Right.
more.
Right.
Yeah.
Right. Yeah. I mean, Dan's question is very to the point. He's saying, okay, now you've got this capability. What are you going to do with it? What are the businesses we're going to be in? And that's exactly to your point. I mean, thank God there are some analysts who have the plasticity of mind to be able to think about these things properly. It is very difficult to conceive of a gigantic organization doing, $30 billion of business a quarter and saying to them, okay, everything you're doing now is legacy, and 3 years' time is going to be completely different. What are the things you're going to be doing in 3 years' time? It's mind blowing. There are very few companies. I can't think of one company. Well, maybe what's the guy who's just become a Bitcoin treasury company,
Strategy?
MSTR.
Yeah. Oh, yes. Yeah.
I mean, he converted from being a software company that I knew quite well. Actually, one of my clients used their software, and we integrated with it very successfully. And then he became a Bitcoin treasury. Now, I've never, that level of transition for a public company is incredibly difficult to get, people to go with you in that journey, investors to go with you in that journey. And it's happening to one of the biggest companies in the country. It's happening to an auto manufacturer. Now, their revenue is not anything like the General Motors revenue, but their gross margins are close to the General Motors revenue. So it's margins. So it's amazing, and it's very insightful that he's asking Elon, how should we think about what you'll be doing in the future?
His second question was interesting too, or something right up your alley. People are asking this: what are the differences between Tesla and XAI? And he explained it. Obviously, we understand what the differences are. One is an LM trying to become a AGI. The other one is very focused on embodied AI. But it's also important to kind of ask that question because because it's going to be up for the vote, and it feels like that Tesla board members are not convinced that Tesla should invest in XAI necessarily. I don't know. I'm just reading a lot into the tea leaves there.
It's a very difficult financial decision to make because the time scales for XAI to deliver cash flow positive may be very long. It looks like they're going to be very long. It looks like it's going to be a hard slog. And Tesla has got its own hard slog. So the question is, from a financial point of view, it looks like a very heavy lift. You have to think about what are the upsides. And the upside is clear that there could be a merging of these two technologies of the embodied AI and the large model AI that is not the real world, is not in the physical world, and how they will merge. And I can see the opportunity to do that, and that just adds additional timescales to it. So I am also hesitant. I see a route, a financial route to doing it, and that's through an exchange of equity. And an exchange of equity would be very favorable for Elon. So if you take equity at valuation for XAI, you take equity at valuation for Tesla, XAI's value is like 10x Tesla's valuation for a given revenue component, and hundreds of x for a given profit component. In fact, it's XAI is negative, so it's infinity. So you want to make that swap very carefully, and you want to make it with a relatively small proportion of Tesla stock, which would be a reasonable proportion of XAI stock. So for a very small slice of our stock, we could get a bigger slice of XAI stock, and that stock and that company is under Elon's control. So, that would enhance Elon's control of Tesla by a couple of decimal points. Well, not maybe even a couple of points or two, and that would be helpful to him. So I could see that as a net positive. That's not what most people are talking about. They're talking about taking a part of this $40 billion cash float we've got and thinking, oh, we've got $40 billion, let's spend it. No. Elon is absolutely correct to be hoarding that cash. Could not agree with him more. You've heard me on the subject endlessly. So that's
2 years ago, everybody's talking about buybacks, and you're like, no buybacks. We will need this money. And it's turning out to be correct that there is all of a sudden
to own a huge number of robotaxis and a huge number of Tesla bots. And that's going to be a big drain on the cash for a while. And you know, ultimately it's going to turn into a cash bonanza, but we need the cash.
Good on that. And a couple very quickly here. We got Walt, where is he from? Walter Pisek from Lightshed. He asked about robotaxi in Austin, and it's fantastic because it was the first kind of question that kind of got Elon to explain that yes, even if they are able to, they are able to roll out today FSD, you know, the robotaxi to any state and then let it go at it. But no, we're going to still put a safety attendant in the passenger seat or a safety driver. Some places it's regulatory. So he explained that. And then you have FSD version 14. Is it different than what they do in robotaxi? And Ashok explained that actually they're going to be merging into the one thing. Slight differences because obviously a robotaxi requires different features than a person who's driving the car. And then Colin Rush asked about Optimus. So, you know, all the hard work required to create Optimus, and Elon explained where we're at with that. So again, good questions. You know, at least one was about robotaxi, one was about Optimus. It wasn't wasted on LiDAR or, you know, questions about ridiculously small, unimportant things. So
this may be the first meeting where the analyst questions were as good as, if not better than, the retail questions. And I was disappointed with the retail questions. You know, I fulminated about they're going to burn like 20 of the questions asking about stuff that the company has said again and again they're not prepared to answer. You know, product questions, product roadmap questions. And so why we keep voting these ridiculous product roadmap questions when we know they're not going to be answered is just defeats me. I mean, how unintelligent do you have to be to not understand it? And that's why I don't look at these say questions anymore. And you know, you hear in the meeting, well, we can't ask this question, we can't ask this question. So, but many of the analysts asked good questions. Not all of them, and not all of the questions that any one of them asked were good, but there was clear indication that there's an understanding bubbling up of where we are. As I said at the beginning of the show, there's this understanding bubbling up amongst the analysts, certainly amongst, you know, the leading coterie of analysts, where the company is going and what the changes are that's happening.
I think that's good news. So I'm glad that we covered this, you know, in detail a little bit. They made a lot of them. Analysts made their jumps in their price targets 3 weeks ago, a month ago. Most of them did not move today, but the questions, the kind of the way that they're thinking about Tesla has changed, and that's good news for us investors. We're all kind of slowly, like you said, seeping in. It's not fully out there, but just the key parts, and that's the key layer. So we've moved another layer to the analysts who are understanding the business. And, you know, it's a bit shocking that they're actually talking robots, Optimus, because I thought this was going to be the next, you know, thing. No, we're actually a robot company. No, they're starting to talk Optimus now, even when it's still a startup in a glimmer. So thank you, Larry. Appreciate you. Follow Larry at Tesla Larry. Thank you. And check out his new venture, Lumacenti.
Lumacenti.com.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.